Welcome back to this Moneycontrol live stream. You're watching Closing Bell with me, Nandita Khemka.
Hello, and I am Yatin Mota.
Well, Yatin, it's a good day to be anchoring together after a long time, given the fact that it's a new week, a new, month, so to say. New quarter, new financial year. Yeah. And, of course, we've kicked off FY25, in style.
Correct.
After a very phenomenal run in FY24, the markets have once again hit a new high on the first day of FY25. In fact, the Nifty hit a new high of 22,530, almost, if I'm not mistaken. So that's the, kind of good start that we've had to this financial year. Of course, if you look at the Sensex, even that hit a fresh high. So both the Nifty, and Sensex hit a fresh high. But the broader end of the markets, Yatin, over the last couple of months, we've seen, a lot of pressure on broader end of the markets, right? But today, and they've also started off FY25 on a very sanguine note with the small cap index, in fact, rallying over 3% today, Yatin. If you look at the advanced decline ratio, almost 8.5:1. That was the NSE advanced decline ratio. You have, the India VIX index cooling off over 5% as well, around that 12 level. So, all in all, a very good going for the market. Barring autos and FMCG, all the sectors ended in the green. Yatin, before I talk about other, sectors and Nifty gainers and losers, I want to point out that, April historically has been a good month for the market.
Correct.
In the last 4 years, at least 3 out of 4 years, in fact, we've had positive returns in the month of April, barring April 2022. So, looks like we are in for a good monthly, run this time around as well. But, Yatin, before I move on to other gainers and losers, let's talk about autos. We started the day on a firm note for autos, but a lot of these auto sales data were trickling in, because of which I think, autos came under pressure. Take us through some of the numbers that have trickled in.
So, I think 4 companies, Nandita, have reported the numbers so far, starting with Tata Motors, wherein the numbers were below expectations. In fact, the total sales were close to 91,000 units versus the expectation of 95,000 units. Obviously, the culprit was the commercial vehicle segment, wherein the sales decline was much higher than what the street was expecting. Maruti Suzuki also a satisfactory month, but the sales numbers came in at 1,87,000 units. Expectation was for 1,88,000 units. So, in general, there was expectation that the auto sales numbers would be healthy because of March, but that phenomenon didn't play out. In fact, for Mahindra and Mahindra and Escorts, both of these companies reported a decline in the tractor segment. Escorts tractor sales declining by 17%, Mahindra and Mahindra tractor sales declining by nearly 26%. However, SUV sales grew by nearly 13%. So, that was one silver lining, but yes, all of the auto stocks in trade today were slightly under pressure because of weaker than expected March sales.
And I think Eicher Motors was among the top Nifty losers today. I think 5% kind of an uptick in Enfield sales, but I think expectations were somewhere around 7%. So, that was also below expectations. Aside of that, that was autos, in a nutshell. But realty, metals and media, these were the 3, star sectoral movers today. The realty pack rallying somewhere around 4%. You have metals also shining bright, given the fact that we have positive data coming out of China, right? The manufacturing data, which of course came as a booster shot for the metal names. So, not surprising that, on the Nifty, the top gainers were JSW Steel, Tata Steel among others, Divi's Lab, Adani Ports and UPL. These were the other movers. On the flip side, Eicher, as I mentioned, among top Nifty losers, Titan, Nestle, Bajaj Auto, Tata Consumer. So, the auto as well as FMCG pack, these two came under a fair bit of pressure after a good start, mind you. But Yatin, even in the broader end of the markets, there were quite a few high flyers. Talking about PNB Housing, I think 17% kind of a gain coming in
17-18% move coming in there. There was a credit rating upgrade, there was a report. I think all put together a good day for PNB Housing. So was the case with KRBL, ACE, Hindustan Copper, all of these stocks gaining by nearly 10 to 12% each. What was not doing well on the flip side was CG Power, Sona Comstar, Keynes, all of these stock slightly higher on the valuations, stock down 2 to 3%. But Nandita, as you mentioned, stocks in the mid cap space have been flying. BSE, Indus Tower, all of these stocks up anywhere between 7 to 8%. DLF, the real estate stock, that stock saw a move of nearly 7%. Schneider Electric, GPPL, Muthoot Finance, the gold financing companies in general, because gold is at all-time high, all of those stocks were doing well.
Right. Also, some of the defense names were doing good, Yatin, even railways for that matter. But, on that note, let's take a look at some of the stocks that are on our radar this afternoon. I would like to start with the IT stocks, particularly Infosys, given the fact that it will, in fact, it has seen a hefty 6,300 crore rupee worth tax refund from the IT department. Of course, it also faces a liability of somewhere around 3,000 crore rupees for FY23. But, of course, that far, under, in fact, the refund is something that is outweighing the kind of liability that it's facing, right? But the company has maintained that it is evaluating the implications of the tax orders on both the fourth quarter number and FY24 numbers as well. Given the fact that, this refund, the news of this refund has come just about a couple of days before the, end of the financial year, right? So it will be interesting to see how that really plays out on Infosys's financials. But, aside of that, there's a report on Infosys from Morgan Stanley. It has an overweight rating, target price of 1,700 rupees per share. Of course, we know that we are just knocking at the fourth quarter earnings season, right? And Infosys, will be reporting numbers as well. And Morgan Stanley maintains that Q4 revenue guidance will be a key catalyst for the stock going forward. It is expecting a CC revenue growth guidance of somewhere around 3 to 6% in base case. Now, if you remember last quarter, they had tweaked the guidance, Yatin. They had upped the lower end of the guidance by 0.5% and they had reduced the higher end of the guidance by 0.5%. This time around, the expectations are ranging between 2 to 6%. That's the general consensus. Kotak, in fact, has also come out with a report. It has said that it has cut FY25 CC revenue estimate to 5% vis-a-vis 6.5% earlier. For FY26 as well, it has reduced the CC revenue estimates to 8.7% versus 9.8% earlier. Kotak, in fact, says on the overall IT pack that, it expects the growth to improve in FY25. However, it won't be as encouraging as was being envisaged earlier. And it has cut FY24 to FY26 USD revenue estimate for the entire IT basket by 0 to 3% or thereabouts. Jefferies also says that FY25 revenue guidance could be lower than what the street was factoring in, and a lower FY25 guidance could drive EPS cuts across the IT basket. Morgan Stanley for the IT pack has cut EPS estimates by 2 to 11% for FY25 and FY26. And HCL Tech, Morgan Stanley says has better revenue visibility among the other IT names. But, since the time we saw Accenture cutting revenue guidance when they reported second quarter numbers, IT stocks had come under pressure, Yatin. But I think today it was an okayish day, started on a strong note, but I think gave up most of the gains. But most of the IT names were in the green today. Of course, the next big catalyst for IT stocks will be the numbers that will be trickling in mid-April onwards.
Correct, and the IT stocks will be the first ones to report the numbers. But obviously, this was Infosys talking about Adani Enterprises. Clearly, their foray into the copper smelting space has augured well with copper prices climbing to multi-month high levels. In fact, a lot of metal stocks in trade today were in focus. But talking about Adani Enterprises, we have Jefferies, which has a buy on the stock with a target of 3,800. Now, the company has commissioned the phase 1 of the copper smelter unit in Mundra under the subsidiary Kutch Copper Limited. Obviously, the Mundra unit will also commission the phase 2 in the coming years, but it is quite important given the fact that copper probably will be one of the commodity which will be necessary for the EV transition, for the clean energy transition, and the companies rightly place their asset in a port located complex. Additionally, we will have the power cost also lower than competitors for Adani Enterprises, given the fact that they themselves produce power. More importantly, the company is also looking to be the lowest cost producer when it comes to copper smelting unit at Mundra. Obviously, copper constitutes nearly 10% of company's FY26 EBITDA according to Jefferies, and that could probably add to nearly 3% when it comes to the EV valuation on a SOTP basis. So once the phase 2 also gets completed, this asset might lead to some valuation re-rating for the stock of Adani Enterprises.
Right. Adani Group generally, I think, was doing well today. I think Adani Ports as well reported, I think, record cargo volumes.
Correct.
Because of that, the stock was, among the top Nifty gainers. Even Adani Total Gas, I think, was buoyant in trade. But coming off a long weekend, so one of the stocks that is on my list today is Globus Spirits, and rightly so, it's in high spirits. I think it jumped somewhere around 10% or thereabouts, given the fact that it has commissioned additional capacity at 2 of its units, one in Jharkhand and one in West Bengal. Now, the additional capacity will be used for various products, including extra neutral alcohol, ethanol as well. And the total investment for this additional capacity is somewhere around 142 crore rupees. This will be financed through internal accruals as well as term loan drawdown. Now, if you remember, the numbers for the company were pretty good in the third quarter. The PAT figure, in fact, the profit jumped somewhere around 65% as it transitioned to a new tax regime, which resulted in decreased tax rate as well as led to a reversal of deferred tax liability as well. Back in January, InCred Equities came out with an ad rating on the stock target price of somewhere around 2,519 rupees a share. In fact, it said that a rise in selling price of Indian-made Indian liquor and easing broken rice prices will aid margin for the company going forward, and also energy costs and foray into new markets as well as new product launches will be the key triggers for this stock going forward. That's what InCred Equities had said back in January. But if you look at Globus, it manufactures, markets and sells liquors, sanitizers, animal feed, bioethanol, etc. And the product portfolio includes whiskey, brandy, rum, vodka as well as gin. And distilleries are located in the Rajasthan, Haryana, West Bengal and other states. But if you look at the stock performance, Yatin, from April 29 to Jan 22, I think the stock gained over 10x. It was a multi-bagger. But since Jan 2022, till date, it has lost somewhere around 60%. And if you look at the PE ratio for this stock, Yatin, amongst all the liquor stocks, this is the cheapest because it has 16x 12-month trailing PE. So, I think analysts maintain that, given the fact that it has come up so much and has also been a multi-bagger at the same time, looks like it is, valuations are attractive at this point in time. And of course, this particular spirit stock is on my list, given the fact that we have come off a long weekend, Yatin.
Absolutely, and a lot of stocks to watch out for. The kind of mid-cap rally that we have seen the start of this financial year probably augurs well for the coming days as well. Stay tuned to Moneycontrol for all your business news, views and updates.
Thanks a lot for watching.